Hey guys, this is Aiman, and again, as always, I don't do a lot of recaps. I usually post my trades on Twitter. If you are not following me there, make sure to follow me. It's at AimanBBT. You'll see it written down there in the corner. I usually prefer to take screenshots, write some notes, all the rules, what I did right, what I did wrong, what I could have done better. In a screenshot, it just saves me a little bit of time. But today I wanted to make something new in case you just got bored of my screenshots and my text right there. Anyway, so today I traded Microsoft. I had a lot of stocks on my watch list. You could see that here on the side list I had TCL, Microsoft, AL, Apple, INC, MU, TLRY, APH, NKL, ACL, SCAN, ACB. But the one I liked the most was Microsoft, and let's go through that and let me tell you why I liked it. As you know, I usually go from the bigger time frame to the smaller time frame. And the bigger time frame around here, or the biggest time frame I'm using, is the daily chart. Looking at the daily chart, I saw sort of a reverse head and shoulders pattern around here, and this is showing as a bullish pattern. Why is it a bullish pattern, or a bullish pattern? Especially because we are strong on the daily chart. In the daily chart, we are uptrending and we are above most of the moving averages. You could see that even though we are going up in a choppy way, or even though we are choppy, it's overall slightly sliding to the upside. That's why I prefer to trade this thing to the long side. I didn't trade it yesterday, I didn't trade it before yesterday, I didn't trade it the day before that, but I decided to trade it today. Why exactly today? Because on the previous day we closed as a hammer on the daily chart. This shows me that today we could run to the upside. After hammer, it's a long. That's what I saw. Going from the daily chart, I try to narrow it and I go to the smaller time frame, which is the 60-minute chart. Now let's take a look at the 60-minute chart. On the 60-minute chart, I see a clear resistance level around here. There is some wicks up here, fake breakouts up there, fake breakouts around here, but overall it is this area which is holding the price. Today in the pre-market, that was also the high of the pre-market, 235.80. And you could see that I have a note around here. All of my stocks I'm trading, which are on my watch list, I have these notes on them. This is building my bias, and my bias is to trade according to my rules. And my rules in this case are telling me to trade this thing to the long side above 235.80. So this tells me that no, you're not shorting it, no matter how crazy you are. You trade it only to the long side, wait for the setup to the long side. Once you see the setup, trade it to the long. Now I'm going to the 5-minute chart. Looking at the 5-minute chart, that's my pre-market area. In the pre-market we broke up, which was unfortunate, but it was still a decent setup. And then I'm going to the 1-minute chart, which was my entry price. So at the open, we're opening as an indecision candle. The indecision candle is telling us that we could go either to the long side and we could go to the short side. Because of my rules and because of what I have written right there, I want to trade this thing to the long side. So I'm taking it to the long side and I'm having my stop loss at the low of the opening range candle. Unfortunately, it got me out. First trade, I'm down 1 hour. Now I'm re-entering into the trade, having multiple ads, and my stop loss is below here. At this place, I wanted to set a limit order target somewhere around here. Again, I forgot to change my montage to limit from market. So my montage had the row market set on it. So instead of having my limit up there, I just immediately sold, and you could see that basically that was my average around here. Entry, add, that was my average. I basically sold most of my position at around break even. I didn't like that, I just bailed the rest of my position once it started dropping down, and that was a small loser, like 0.2 R or so, so I'm down 1.2 R on this thing. Now looking at this thing, we are having sort of a double bottom around here, the W shape. I like those for trend continuation. This is showing you that we're having higher lows on those ones. And also confirmation candle, which is a hammer. So I'm taking it to the long side, putting my stop loss slightly above the wicks, taking my first partial at 3 Rs. Okay, so this is my stop loss, this is my risk, this is my reward. So I'm taking my first partial at 3 Rs around here and then partialing all the way up. Now, why didn't I add around here? You can see that this is a trend trade, and usually on trend trades, I try to add into my positions. You could say that, okay, this is an ABCD pattern, and you could have added to your position and moved your stop loss to the last level it bounced from. Pay attention to this. This low around here is sitting at 236.70 or so. Yeah, somewhere around that. Now, let's take a look at the 5-minute chart. So on the 5-minute chart, 236.70 is sitting somewhere around here. That is way farther from the 9 EMA on the 5-minute chart. And you know, looking at my ABCD pattern webinar, I know that stocks, they usually pull back to the 9 EMA on the 5-minute chart. You can see that since the pre-market we were making higher lows, higher lows, higher lows, higher lows, higher lows, and I know that at one point this thing is going to do that new lower low before a continuation. And I'm not sure when that's going to happen. What if I just decide to add around here and then that lower low will happen around here, get me out, and then it runs? I want to keep my average low on a trend trade. So I told myself, okay, no reason to actually add anything around here. Just hold on to your position until you're having that lower low closer to the 9 and the 5. And there it is happening around here. Lower low closer to the 9 EMA on the 5-minute chart. That is an ABCD pattern around here. And I see that on the 5-minute chart, we're getting wicked up. We're getting wicked up. So this is showing me that there is some buying pressure. I'm going into the 1-minute chart and I see that on the 1-minute chart, there is a support level around here and we broke it. I like the fact that we broke it and we got back up because this was a trap for shorts. People are shorting it the moment it breaks the support area and then they immediately get squeezed. So what am I doing? I'm adding now to my position and I'm having my new stop loss. I don't use the wick. I never use the fake breakouts as my stop losses. I use the closest technical level I have other than the fake breakdown. So that's my entry, that's my stop loss. And look at this, with an average around here, double my position, new average, quadruple my position, new average, 8 times more than my original position. So like 10% remaining could be 80% of your original position with an add around here. Now I took a partial, took another partial because I was afraid that this could have been a fake breakout around here. Now let's go to the daily chart because I need you to see why I decided to exit all out here. So this is the 5-minute chart, guys, and you can see that I exit the rest of my position at 239.70. Why did I do that? I did that because of the daily chart. The daily chart, let me show you that. We need the average to range, and especially when trend trading, you need to check the average to range. On the daily chart, you can see that the average to range on this thing is somewhere around $5. So it's telling us that Microsoft intraday moves around $5. It could make more move, like $6, $7, and it could make smaller move, which is somewhere around $3, right? Yeah, somewhere around $3, $3.5. But the average is somewhere around $5. Looking at this, we went from 235 all the way to 240, and that's basically the average true range. And I see that right now around 240, we're just struggling. We can't go higher, we can't go higher, we can't go higher. So there is no reason for me to continue holding on to this thing, and I just exit all out because I'm afraid that it could drop down and get me out. And if I held into my position, especially with my new average after this add, I would have been stopped out around here. I'm not telling that it will not continue going higher. We're breaking a consolidation area. You see this, we're breaking consolidation area and we are having room all the way, we're actually staying closer to the resistance area at 241. So yeah, we could make it all the way back up to 241 and maybe even higher, right? But I knew that I will not survive the pullback if it decides to pull back. So I just decided to exit all out, and that was it. This is the way I usually trade trend trades. If you're trading a trend, you need to keep your average low. Be smart about your ads. You can't add on the way up because you never know when it's going to pull back. Like if I added around here, that would have been a huge winner, and it never pulled back. But the next time you're getting into a trend trade, it will just simply wick you out before it starts working out. So yeah, that is it for today, guys. A little bit longer recap. I hope you all had a great trading day, and I will talk to you in the chat room. If you have any questions, feel free to comment below or email me aiman@bearbaltraders.com, and I will be more than happy to help.